Hello traders, Gary Wagner here, a little bit after 11 o'clock in Honolulu, making it 5 o'clock in New York. It is Tuesday, the 7th day of August, and this is the daily report for gold and silver. In quiet trading, we do have the precious metals across the board trading higher today, although in terms of percentage gain, silver is certainly maintaining the lead in this move up. Currently, we're up about 80 cents on the day in gold. Currently, we're trading at 1611.12. We have a low of 1607 and a high of 1619.50. Silver showing a nice gain on today's trading, up almost 1 full percent. As you can see, currently trading just above $28 per ounce. Trading at 2807. The high is 28.34 and the low is 27.71. Traders, I want to start off today's show by looking at a much shorter term chart than we typically do. This is a 2-hour chart. It is in Heikin Ashi format, and as you can see, it is of COMEX gold. Let me go ahead and blow that up just a little bit. And here's what we've been talking about, and here's what my current observations are. Of course, when we look at major resistance, 1620 here, 1630 right in here. This is the band that we have been unable to take out. You can see these series of tops right in here and here. As the marketplace moved down, it did find very good support. It found that support in terms of the level 1590. And the interesting thing about 1590 is that the old level of support was about 1580, and that's moved up from 1560. What we are witnessing is a series of higher lows in the marketplace. Consider this. When we look at the market, and this is back June and July, our lows have consistently gone up, and I'm trying to get them around the body of the candles rather than the extreme lows, so we get a better read on really the trading range itself. And there can be no doubt when we take a look at the market in this way, we have had that series of higher highs. However, higher lows, However, when we take a look at these highs here, we have yet to be able to take out this most current resistance area. And in fact, when we look at the market as it trades currently, as I said, very, very short term, but we see the support here at 1590. As the market trades up, it does find resistance right at around 1615, and now the candles on a short-term basis have gone and turned red again. And traders, the support and resistance levels become very, very evident, of course, when we look at our daily chart. Again, we're looking at, this is a straight candlestick chart, Heikin Ashi format. All I've done is basically added some horizontal lines, and in terms of where they have been put, of course, the lower line, this is matching the lows, and then I've selected certain tops as the market came down that should be areas of resistance if this market continues to trade higher. Let me go ahead and blow that up for us, and you'll get a better idea of what I'm looking at. First and foremost, there's no doubt, we've got really strong support, 1540, but as I said, that really is older level support because new support seems to be coming in at around 1550, 1560 in that area, and that's simply because we're getting these series of higher lows. Now, when we look at areas, top areas, this has been the first area that we couldn't overcome. Now, that's above 1640. If we take and move or copy one of our horizontal lines and then paste it, we will see that as we draw this line down to our current top, and that's at around, call it 1630, you can see that it does match in a couple of areas in terms of historical references. And what I mean by that is, as a technician, all we really can do is look at how the market reacted at this particular level at times in the past and see if we can draw any inferences or any kind of correlation to give us a sense or a feel for how strong or weak a particular support or resistance level might be. So when we take this next level, and this is the level we have not been able to take out, this is roughly 1630 to 1635, what we can see is when we look at historical data points or references to it, we can see that there is an abundance of data in this area that can really support how strong of a resistance area it is here. You can see it being very supportive right back here. This is back middle of March. This, of course, is April. Very, very supportive. As the market came down, it did tend to form a base as it's formed down here. And then you can also see, as the market came off of the record top in gold, and that's this area right in here, as the market traded lower, of course, it did come down. This is that 1520 low right in here. But you can see that the bulk of the trading activity was supportive of this particular price point. And as I say, that is above $1,600. Market, of course, then trades higher. It's got two different peaks in the market, both roughly just around $1,800 per ounce. The first time that it fell, not only did it fall through this, it fell hard. As you can see, look at the size of the gaps that we get in these bodies right in here. Finds a tentative bottom, comes up, and then this is really the first time that this supportive area becomes resistance. That's right in here. Cannot take it out, and it then makes a play. This is that secondary or double bottom that we see in the market. Of course, the market then tracks back up to 1800, as you can see, just shy of the first top after coming off of this record top of 1920. And then as the market comes down, unlike the first time it sold off hard from being at 1800, where it just kind of really dropped through and this became resistance, it attempted to find some supportive activity right in this area. As you can see, you have a couple of points in which the market genuinely trades below, but for the most part was able to hold this as a supportive price point. And then we got some real resistance at this next level, this being 1680, and this being, of course, 1700 right in here. So you can see that as the market tried to find support, it couldn't. You get this hard break right in here, and that was it, because from this point forward, this particular price point, meaning 1630, 1635, became superlative resistance, and a resistance area that the market up till now has not been able to take out, and we have this series of three smaller tops. You know, traders, gold, more so than silver, has been extremely, extremely sensitive, of course, to a dollar, the US dollar, because that's what it's paired against. And we're looking at a daily chart continuous contract, and the key right now is this level just at above 84. That seems to be really strong resistance in the dollar. We get this peak that appears not only once, but twice, and then a third time we get a higher high. However, the market does genuinely soften at that point. You can see it's now trading near its lows of the day at 82. And the key areas that we talked about yesterday in terms of if we see a breach in the market, we could see the market carry on much lower, would be these areas right in here, this particular low and this particular low. Those are the lows that are currently being watched and watched. We are looking at a weekly chart, dollar index once again, and in the weekly straight candlestick, of course, in the weekly chart, it becomes very, very apparent when we look at this particular top, these tops right in here, right at around the 84 mark. You can see that. You can see these small-bodied candles. That really signaled the reversal. This long down week, and of course this happened 3 weeks ago, and then the follow-through. We have had consistent lower lows each week for the last 3 weeks and lower highs. And that to me is obviously a signal that the dollar in fact is weakening. You know, we were stopped out, obviously, a little bit prematurely on our last trade. There were some profits that we left on the table, but the key was we did have profits. We took profits, but maybe not as much as we should have. I've been a little reluctant to re-enter the market because my sense is that every time it's gotten to a certain resistance area, the market sold off and it's trading in that tight range. We're looking at a short-term cash silver chart, 120 minutes, Heikin Ashi format. And what you can see from this chart right in here is as the market comes up, it comes up and then hits these highs just at around 28. You can see these highs right in here, but really sells off and it stabilizes where it's trading between, call it 27.75 and then 27, say 90, 95 right in this area. The market then does break out. We get this long string of green candles right in here. But over the last couple of hours in trading, as you can see, it has gone red and doji-like on this last candle. Of course, it's still trading. It could turn out either way. But you can see that the body size has definitely been contracting. It tells me that the rally that we have been experiencing in silver, and you can see this huge spike up as the market trades from, just above $27 an ounce and pushes up almost a full dollar, this being 28 here. You got this huge spike up accounting for about a 75 or 80 cent move in the market. And then it kind of consolidated before pushing up again. The question is obviously, is the market going to consolidate in this area, trade sideways for a little bit as we saw here? And here, smaller retracement. This is more sideways. And what I'm trying to say is the market going to trade sideways again for a little bit and then shoot up? If so, how will it react at this resistance area of about 28.35? Or are we going to witness it move back down? Now, when we look at the Western technicals, this of course is the MACD. The market is overbought at this point, but there is still more room to the upside on a technical basis. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.